Ladies and gentlemen, good day and welcome to the Onward Technologies Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from EY LLP, Investor Relations. Thank you, and over to you, ma'am.
Thank you, Zico. Good evening to all of you. Welcome to the Q4 FY23 earnings call of Onward Technologies Limited. The results and presentation have already been mailed to you, and you can also view them on the website at www.onwardgroup.com. To take us through the results today and answer your questions, we have with us Mr. Jigar Mehta, Managing Director of Onward Technologies Limited. He will start the call with the business update and financial performance for the quarter, which will be then followed by Q&A session. I would like to remind you that anything that is said on this call that reflects any outlook for the future or which can be construed as forward-looking statements must be viewed in conjunction with risks and uncertainties that we face. These risks and uncertainties are included but not limited to what we have mentioned in the prospectus filed with the SEBI and subsequent annual report that you can find it on our website. Having said that, I will now hand over the call to Mr. Jigar Mehta. Over to you, Jigar. Jigar?
Yes, hi. Thank you, Asha. Good evening, everyone, and thank you for joining our Q4 and full year FY23 earnings call. It is a pleasure to speak with all of you this evening. Let me start with the financial year performance, and then we will speak about the quarterly and business update. FY23 was a remarkable year for us, and we're very happy that we could meet several of our own internal corporate milestones. Despite uncertain macroeconomics, our team was able to deliver strong revenue growth of 43.5% to rupees 440 crores, 40.9 crores of revenue. This was the highest ever growth on an annual basis. EBITDA stood at 27.3 crores, reflecting a growth of 27.4%, and EBITDA margin was at 6.2% on an annual basis. We witnessed broad-based growth driven by our three focus verticals, which is industrial equipment and heavy machinery, now 55% of our total revenues, transportation and mobility vertical, which includes automotive and rail, which contributes 30% of our revenue, and the fast-growing healthcare and medtech vertical, which contributed 8% of our top line. We continue to see robust demand in all three of our focus verticals. And I'll talk a bit more about that later on. The digital services business of ours, the line of business, continue to grow well, as shared earlier, and now contributes 70% of our revenues on a consolidated basis. In terms of geography, U.S. and North America, which is North America includes U.S., Canada, and Mexico, grew at 70% of our revenue, grew at 70% compared to the previous financial year, while Europe and India closed this year with 33% and 30% growth respectively. Additionally, our focus on verticals and strategic clients, all supported by a network of offshore capability centers, have contributed meaningfully to both our top line and the bottom line. Now, talking you through the Q4 performance and the financials at a consolidated level, it was another quarter for us of consistent performance, and our operating revenue stood at 121.4 crores, reflecting a remarkable growth of 38.8% on a year-on-year basis and 4.8% on quarter-on-quarter basis. Our EBITDA stood at 14.1 crore, with the EBITDA margin now at 11.6% rounded off, the highest ever on the technology history in terms of quarterly performance. We reported double-digit EBITDA margin and aspire to see continuous improvement every quarter from here on. Net profit after tax was at rupees 7.2 crore. We now have a little less than 100 clients, active clients, which are 98, out of which 15 contribute more than $1 million per year in terms of revenues. And very happy to share that our top 25 clients continue to grow very well and contribute 81% of the total revenues in the company. Our global headcount is at 2,798 full-time employees, and this is post the exit of several large domestic projects in the ITS LOB, which we've been doing in India for the last several years. We have a diverse global team now across US, Canada, UK, Germany, and India. And again, happy to share that more than 20% are women engineers and employees, and we are committed to growing this number and every year going forward. I'm also happy to share and announce with all of you guys that Mr. Pawan Nathani has joined us as our new CFO. He will be an integral part of the company's management team, helping Onward Technologies to achieve both long-term financial and operational goals. A quick background about Pawan. Pawan is 42 years old, qualified chartered accountant, and lives in Pune. He has 20 plus years of industry experience, and in the last 11 years, he was part of a very fast-growing listed software services company headquartered in Pune, where his role was where he was responsible as a financial controller for APAC and also responsible for consolidated record to report function of the company. Now, just talking a bit more about the future and the demand environment, FY23-24, we continue to be very positive about where we are heading as an organization. We have made huge transformational changes over the last 12 months. And this financial year, our focus continues to be improve our operational parameters, which indirectly and directly will affect our bottom line, which is the EBITDA percentages. We will see balanced growth from all our top clients and across all three digital, embedded, and mechanical lines of businesses. We will continue to maintain US and Europe as the biggest geographical focus for the company. So no plans to get into new markets. And in India, we have 5 centers. We are continuously investing in all the 5 centers, which is Mumbai, Pune, Chennai, Bangalore, and Hyderabad, in terms of infrastructure, in terms of hiring a lot of talent, and expanding continuously our TAP program, where we hire GETs and PGETs to strengthen all the new age digital technologies and embedded technologies, where we continue to see huge demand. Our talent acquisition team is working full gear, and even today we are hiring for hundreds of open positions, both internal and to support our clients. Thank you, everyone, and I will now hand over the floor to the operator to start the Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Nikhil Chandak from JM Family Office. Please go ahead.
Yeah, hi Jigar. Congrats on a good result. I had a couple of questions. One was on the margin trajectory from quarter, say for fiscal 24 and beyond. You already are at say 11.5-12% EBITDA margin. So where does this margin go? Say, for example, if one were to look at exit margins for fiscal 24, say March 24 quarter, where should this margin number be headed towards? That's one. Second is I see that India business is still 40% of our total income. So does that trend continue where India remains 40%, or do you see that India business going down over a period of time? And that could further help, the margins to improve from where it is right now.
Hi, Nikhil. Good evening. So I'll answer both your questions. I'll take the second question first because that's related to the first one. So our focus is, if you see, this is the first year and the first quarter in terms of where our international business grew obviously much faster based on the investments that we have done than the India business. We continue to remain bullish on both the markets, the India business, which is focused on the GCC customers, and our global business, which is on expanding our presence both on the offshore side and on site with the customers. So, now coming back to your question, our global revenue is, we believe in the next 2 years, our global revenue it will be close to 70% of our consolidated revenues. And that's where all our investment, our focus is going today as we speak. While India revenues will continue to grow, our international revenues will grow at a much, much faster pace. And that's where the majority of our investments that we spoke about in the last 3 years have gone, where we had very diluted earnings or EBITDA in the business. Now, coming back to the margin, the first question that you had from 11.5%, we see a very positive trend in terms of where we are today and in terms of the investments that we've already done. We've exited a lot of the large projects in the domestic market, which was a legacy business that Onward was continuing for the last 8-10 years. And that obviously has consolidated overall our focus. So we do believe we can get very close to mid-teens in 2023. And that's where we are striving hard and working towards.
Okay, understood. Thanks. And, one question I had is, so we've ended fiscal 23 at something like 440 crores of revenue. And you earlier have spoken about $100 million aspirational revenue target by fiscal 26. So does that, business plan still hold, on track? How should one think about 100 million by 26?
So we are very focused on the target. We are very focused on the milestone that we shared, what we are aiming towards, and that's how the whole company and the leadership team is focused on. And we continue to believe that it's a realistic target. The market exists for us, for a young company like us, and we have our own differentiators. And the clients that we have 98 live clients. So to get to $100 million, we don't need new clients, which is the toughest part in our business model. It's more about investing in the latest technologies, building capabilities and capacity for our customers. So from our perspective, we continue to see a very robust demand from our existing customers. There's definitely a slowdown. There's definitely a consolidation happening at various levels at our customer sites. But the demand environment continues to be very robust, and we are optimistic that we can actually hit those numbers in the next few quarters or by 2026.
Okay. So this 100 million is all organic, as in there's no acquisition built into this $100 million target.
So, Nikhil, when we shared the targets about a couple of years ago, it was a consolidated target, which was organic and inorganic, and post that is when Infinity Finance came on board as a private equity investor. So, and we were looking at inorganic opportunities as well, as we have discussed in the last several earnings calls. But we've seen such a huge, exciting environment where we could grow 40% plus this year and 28% plus last year. We believe inorganic is the right way forward for us at this stage of our business model. But if there are good opportunities available to us, which actually helps us accelerate towards 100 million much faster, we are very open to it. So the entire board is very supportive of that, and every quarter we are always engaging with talking to multiple companies which potentially could fit our strategy.
Understood. Perfect. Thank you so much. Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Sugandhi Sud from InCred Asset Management. Please go ahead.
Yes, hi. Congratulations on the great results, and thanks for taking my question. I wanted to understand, in terms of your, you mentioned that the headcount was impacted by ending certain contracts in IT. So, have we been hiring outside that space? And, you said that, hiring outlook and expansion continues to be strong. That was the first question. And, within your, for whatever pipeline you have, we've seen a lot of strong growth from your top client and within the, vertical, key vertical. So, going forward, do you see, demand coming uniformly from across verticals, or is it, going to be similar in terms of what we saw this year?
Hi, good evening. I hope I got the questions in order, but let me address the first question in terms of the headcount. So what we have done and what we had shared earlier as well is, currently we are structured in our revenue structured by 3 lines of businesses, which is ER&D, which includes mechanical and embedded. The second is digital, and third is ITS. ITS portion, which was 21% of our revenue and probably close to 25 to 30% of our headcount last financial year, FY23, is 100% in the domestic business, right? Domestic industry, which is in the India market. Now that's the business that we had shared few years ago that we will slowly start exiting whenever the contracts come up for renewal and or when there's the right opportunity where the customer can transition into some other supplier. And we are committed that we will not lose jobs towards that. And that's what we have now reduced that in Q4 of this year. That 21% is down to 8%. So about 400 people net in the last 12 months have been transitioned out from the business model. Was that your question?
Yes, that's exactly. So some of these would have absorbed across the organization in the ERD and digital businesses, and some of them would have. There might have been some natural attrition as those projects were unwound.
So absolutely. So the 2 things. So one is, these are large managed services contracts. So attrition was not very, very high in these clients, in these contracts, and it was well budgeted, being a long-term contract. So we had given an opportunity to all our employees, whoever wanted to move from ITS to digital to cloud to data science. We invested behind them in terms of training and the certifications, and a lot of them moved gradually towards the digital part, which actually was our fastest growing in terms of for the last few years. A lot of people prefer to stay in the old, prefer to continue in ITS, and they were doing very well. They were the ones who transitioned out to the new suppliers to support the same large system integrators, the SI clients that we had.
Okay, sure. So in terms of your realization per employee, I noticed that it has gone up naturally as the business mix is improved. But within ERD, are you experiencing some ability to be able to charge higher because of the nature of what you're doing?
So absolutely, right? So ITS is become a commodity when you look at the domestic market, right? And that's the reason over about 5 years ago, we started transitioning out of the ITS business. First, we started moving away from the India market 100% and going global. That's where all the global offices came up in US, Canada, and Europe. And a lot of our key people, my entire management team, all moved abroad. So if you look at even today, majority of my management team sits outside India. That's the first part. The second part is the rate is obviously much, much higher based on just pure economics for digital, for data analytics, and of course for embedded and electronics case. Whether it is ADAS, whether it is various other areas that we are competing with today on the software and hardware side, and only supporting large MNC OEMs. So the rate structure and the rate per employee also goes up substantially.
So within ERT, could you give us an idea how much digital is now compared to earlier?
Yeah, absolutely. So in Q4, so all these details are captured in the earnings deck this time. We have the team has done a fabulous job in putting a lot of the data together and sharing with you guys. I know it was just released a few hours ago. But our ER&D revenue, which includes mechanical and embedded, is 72% of our revenue in Q4. 20% is digital and 8% is IPS. So the way I would look at it is that 8% IPS is client contracts, which are a lot of our key people are moving slowly towards the digital, and the customers are also moving to the client, the contracts on the digital side. So we don't see the need to exit those contracts and vice versa. So it's more about expanding that and investing in the training that the whole business moves towards digital. Keep in mind, just to share again and just reinforce, what we are working towards and where we believe when we hit $100 billion in the next few years is 70% of our revenues will come from the global market, which is US and Europe. And we are targeting that 50% of our revenues which come from digital services. So 50% of the digital services, 50% will be mechanical and electronics engineering. And there will be no IPS left in Onward Technologies.
Sure, that's very helpful. So just to repeat my earlier question on the pipeline between industrial and transportation and healthcare, do you expect a similar mix, or do you expect that to also evolve based on the pipeline that you have?
So great question. In terms of the demand environment from all three verticals from our existing clients continues to be robust. So we see a huge opportunity in all the three areas. But healthcare being a very small percentage or in terms of rupee value of our overall revenue, that will grow the fastest, right? And that's where we've recently signed up the customers over the last 2 years. The demand is 100% digital and some embedded. There is obviously no IT there. And the volume of the deals obviously are much, much higher. And the entire healthcare business of Onward is 100% export. So it only comes from US and Europe. There is no India market that we are part of, where the revenue is generated from. So that revenue will continue to grow very fast. Our new investments in Michigan, our new investments in UK and Germany will grow our automotive business much faster as well, which comes under transportation and mobility. And on the industrial equipment and heavy machinery side, we today work with the best and the biggest brands in the world, where the demand is where we are moving away from pure play mechanical more and more towards embedded and now digital. So we see opportunity across the spectrum in terms of to mine the existing clients. And I shared just want to add one more point to clarify. What's happening for us right now is, as a young company, and obviously our revenues are growing with our existing clients, which is now at 81% out of 25 clients. But the other 70 odd clients that we have are also growing exponentially in terms of all the new clients that our sales team have won in the last few years. And a lot of them have also come through the good work that we do through references. So there's a huge opportunity that they will grow as well. Just to add to that, for example, we signed multiple healthcare companies where we signed the master services agreement and became a supplier just in the last 1 quarter. Similarly, on the automotive side, we work with 6 companies today out of 10, the top 10 automotive, and one we already signed last quarter. That's the 7th, and one more we are hoping to sign in Q1 or Q2 of this year. All the work has been completed. The first pilot has been successful. Now it's just completing the paperwork. So we are moving slowly in the right direction. And so to summarize, all three industry verticals will grow. Healthcare will be a huge growth driver for us, not only in 23-24, but also 24-25. And that also catapults well with our strategy of digital services.
Thank you. That's very helpful.
Thank you.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Amit Mittal from Blue River Capital. Please go ahead.
Hi, Jigar. Congratulations on the excellent set of numbers. And actually, when I look at your reported numbers, the growth looks like 40% year-on-year when it comes to revenue for FY23. But if you actually remove the non-focus area, the IT business, our growth is close to 60%. So again, congratulations. There's a couple of questions I had. So one is on our top line concentration, which is close to 17-18%. Just your thoughts on, are we planning to reduce this, or are we okay with this kind of concentration?
So, Amit, we are a very young company. As I said, 440 crores in the software export market is a very significant small number. We have just started working with all of these companies. And if you look at our top client, or top 5 clients, or top 10 clients, 81% sounds very exciting because that's where we believe we want to move towards. So we are not concerned about having too much there because the same clients are expanding at a much faster pace. But if you look at the other 24 clients as well, they all are also growing at a very fast pace. And we do believe that more and more we shift towards from a commodity business to our digital services business. There will be a huge opportunity to grow with all the top 25 clients and at the same time the new clients that we have won in the last 2 years post-COVID.
Sure.
So the I would look at, Amit, just to summarize is that the new clients that we are signing today are straight away have the potential, if we do execute the strategy right, that our 98th client today, which is, let's say, who we just signed last quarter, has the potential to enter top 25 very quickly as well. Right? So please look at it from that perspective because the numbers are very small when you look at the R&D budgets of these large global corporations.
Fair. And just to carry forward from the last participant's question, you mentioned that you signed some automotive clients last quarter and you expect something this quarter also. Could you just shed some light on the kind of work that we do for these auto clients, the kind of work that we are getting for these clients? You could just elaborate on the nature of work. Hello.
Ladies and gentlemen, please stay connected. The line for the management has dropped. We will reconnect them very soon. Ladies and gentlemen, the line for the management is reconnected. Mr. Amit Mittal, you can go ahead with the question.
Yeah. Hi, sorry, Jigar. So, just from, so you mentioned that you won some, contract recently with some of these top auto guys. You just shed some light on the nature of work that we are doing for some of these companies.
Sure. So, Amit, what I shared was, for us in actually on the R&D space, I believe you know that space well. So what I shared earlier was we have recently, after 2, 3, 4 years of pilot projects, references, site visits, we have now become an official supplier to these OEMs in US and Europe. And this is in the electronic and embedded space where we have become a supplier. And then the other client is on the digital and the data science space where we have become a supplier. And one of the first large projects that we have been selected for is on process automation. And that's what we are building the team for them today. Because again, for the project has just started, I'm allowed to only share very little information, but very happy to share, I guess, over the next few quarters as we ramp up the team for these customers.
Sure. And just lastly, a bookkeeping question on the tax rate. I mean, do we get to 25% in FY24 or remains at 34%?
I am not there, but I will get back. I'm not an expert on this, but I will get back to you.
Sure. Perfect. Thanks a lot, Jigar, and all the best here.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Yash Rajendra Shah from Fidelity Management. Please go ahead. Yash Rajendra Shah, your line has been unmuted. Please go ahead with your question. Mr. Yash Rajendra, your line has been unmuted. You can go ahead with your question.
Hello, can you hear me? Hello?
Yes, we can hear you now. Please go ahead.
Yeah. See, you have a very large runway, Jigar, in front of you and very broad runway. But what are the risks and worries that you have in terms of this blistering growth that you foresee? Hello?
Great question. Nobody's ever asked me this question before. But in terms of worry, I think it's more significantly, I think it's on the execution side. I think where our team has done a phenomenal job, I believe, is on winning new clients, showcasing our capabilities, moving us from a pure play mechanical field to embedded and now digital. We attracted some amazing talent. As I said, close to almost 3,000 people who are all working very hard. Now, the challenge for us is, or the only thing which I believe for the next few years is on the execution side. As far as we keep focusing on execution and delivering for our existing clients and not get distracted, and I think that's fundamentally the biggest internal conversations that we have week in, week out.
So that's in your control.
It's not just attracting talent because it's in our control. That's what we believe, yes.
Yeah. But so it really seems to
the hard work is done. That's what we believe.
And the potential for all your business concentrating is huge, it seems, in the next 5-10 years. And it's also helped the country earn a lot of foreign exchange also.
We were trying to build a foundation. We believe we have a decent foundation now. Now it's all about adding a lot more depth, and that's what we said, in the last earnings call as well, that our investment cycle has not completed. We've just started. We are continuously adding a lot of SMEs on the digital, on the embedded space. We are.
Are you looking at any new verticals?
Possibly down in the next few months. Can you hear me clearly?
Are you looking at any new vertical also?
Not currently. The 3 verticals for this year with so many external macro environment factors. I think we have 3 verticals that we'll continue to focus on this year. But next year, our goal is to get into high tech, and we hope we can start investing in that in a very big way very soon.
And what do you mean by high tech? If I will please explain.
So semiconductors and a bit of the large product companies, the dream companies in the world like Apple, Facebook, Google. They're also doing a lot of work on product development.
Thank you. Thank you very much.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Shubham Ajmera from Aurora Family Office. Please go ahead.
Yeah, hi. Congrats on good set of numbers. So I have a question on the estimated guidance of like $100 million mark, so just wanted to see like how confident are you to achieve this by financial year 26 and also on the margins front. So as you mentioned that we will be achieving the mid-teen margins in the current year. So what would be our target margins by financial year 26 as such?
Sorry, I didn't get the last part. What is the target?
So I'm asking about the targeting margins by financial year 26. As you mentioned that we will be targeting the mid-teen margins in current year, like financial year 24. So what would be the estimated guidance on the margins front for 26?
So what we are saying is, we are not a large company, we are a young company, and we have to invest. I think mid-teen is a good place for a company that I personally believe, and I think our board believes, that mid-teens is a good place for us to be at and then invest everything back in the business. So our business is, I would say, more than 90% is OPEX. So in terms of hiring SMEs, hiring training, hiring GEPs and PGETs, a lot of lateral hiring, and of course the firepower in terms of sales and the rainmakers that we need outside India. So mid-teens is what I would like to say is that I think we will be very happy to be with. But the real focus is to continue to make sure that we serve our customers, and we are investing in technology, especially on the digital and embedded space, where Onward is very new for the next few years. So I'm not restricting only for the next 1-2 years. I'm saying for the next 5 years. I think there's a lot of opportunity for Onward to invest and build capabilities.
Okay, got it. And on the revenue front, like any revenue guidance for the before 26 years?
We don't provide revenue guidance, but as I said, we continue to see robust demand, and our focus is to keep growing and investing in US and Europe, and we believe we are on the right path. We are adding great people. Our customers are growing, and the demand environment seems to be positive in terms of what we are doing, especially on the offshore side. So the whole focus is to keep expanding offshore for the next few years. And we have 5 capability centers now. So just earlier, if you still remember, Onward was just only in Pune. Now we have 5 amazing locations which are ready, well invested with strong leadership teams. So the opportunity for us is to meet the client demand is very high today than what it was 2 years ago.
Yeah, okay, got it. Thank you.
Thank you.
Thank you. To ask a question, you may press star and 1 on a touch-tone telephone. That was the last question of our question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you, everybody, for joining us this evening on very short notice. Appreciate the support that all of you guys have given us. We continue to be positive in terms of what we are doing. We are at the start of a beautiful journey, and we continue to believe that the hard work and the huge investments that we have put in terms of winning these clients, now we channelize our energies for the next few quarters and years towards execution as we scale up the business in all the 3 regions, which is US, Europe, and India. Thank you again. If there are any more questions, very happy to address them through our new IR manager, Johnson Young, through the quarter. Thank you again. Asha, over to you.
Thank you. On behalf of Onward Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.